Okay, today we see how to prepare fund flow statement. What are the steps we have to follow in preparation of fund flow statement? Okay, regarding this fund flow statement, first requirement is you have to prepare the changes in working capital. First requirement is change in working capital. Okay, you already studied in the ratio analysis, what is working capital, net working capital, gross working capital, and how to calculate working capital. So simply I'll tell you, working capital is based on current asset and current liabilities. Okay. On the basis of current assets and current liabilities, you have to calculate the net working capital. And thereafter, you have to know the change in the working capital. Change in the working capital means what is the change in the working capital as compared to previous year. That means you have to take the current year, current assets and liabilities, and previous year, current assets and current liabilities. On the basis of current year and previous year, you have to calculate the change in the working capital. That is the first requirement in the fund flow statement. ಮೊಟ್ಟ ಮೊದಲಿಗೆ ಏನ್ ಮಾಡಬೇಕು, ಕರೆಂಟ್ ಅಸೆಟ್ ನಲ್ಲಿ ಎಷ್ಟು ಬದಲಾವಣೆ ಆಗೈತೆ ಅಂತ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕು. ಯಾವ ಆಧಾರ ಮೇಲೆ ಅಂದ್ರೆ ಕೇಳಿದ್ರೆ ಹೋದ ವರ್ಷದ ಮತ್ತು ಈ ವರ್ಷದ ಕರೆಂಟ್ ಅಸೆಟ್ ಕರೆಂಟ್ ಲಯಬಿಲಿಟಿ ಆಧಾರದ ಮೇಲೆ. ಓಕೆ, ಸೊ ಟು ಪ್ರಿಪೇರ್ ದಿ ಸ್ಟೇಟ್ಮೆಂಟ್, you remember if there is increase in the current asset, last year to current year, if there is increase in the current asset, that increases the working capital. Remember this, increase in current asset, increase in working capital. Decrease in current asset, decrease in working capital. Remember this. Okay, from last year to current year, if there is an increase in the current asset item, then there is a increase in the current working capital. If there is a decrease in the current asset, there is a decrease in the working capital. This is the rule you have to follow. And the third rule is increase in current liability. If the current liability increases, that means creditor, bills payable, these items increases compared to last year. Okay, if there is an increase in the current liability, that indicates decrease in the working capital. Decrease is the working capital. Okay, and decrease in current asset leads to increase in working capital. Remember these two. So in case of current asset, there is a direct relation: increase, increase, decrease, decrease. But in case of current liability, increase in current liability, decrease in working capital. In decrease in current liability, increase in working capital. First statement we have to prepare. Okay, this is the first statement. And second statement required is required assets and liability account. You have to prepare some required accounts. The required account means it may be fixed asset account. That means land and building account, machinery account, plant account, like that. Fixed asset accounts you have to prepare for the purpose of finding the purchase of asset or sale of asset. If you want to know the purchase and sale of assets, if it is confusing, if you are not having clear picture, regarding purchase and sale of asset, then you have to prepare the fixed asset account. Okay, on the basis of last year balance and current year balance. If you are able to find out sale and purchase or depreciation, then there is no need of preparing the asset account. Okay, and next you have to prepare the liability, that is provisions account. It may be provision for depreciation, provision for income tax, provision for proposed dividend, like that. 3 current liability accounts you have to not current liability, provisions. 3 provisions account you have to prepare in connection with the liabilities, and in connection with the asset you have to prepare fixed asset account for the purpose of ascertaining the purchase and sale. Okay, purchase and sale. We will study in detail in the next slide. And third is funds from operation. After completing the required accounts, you have to calculate fund from operation. Fund from operation means what is the fund you raised. Fund you raised from your day-to-day activity. Operation means your operation of program, your activity. That is called as fund from operation. Fund from operation statement we have to prepare. Third step. And fourth step is fund flow statement. These are the 4 steps you have to follow. You have to follow to prepare fund flow statement. First, you have to prepare the changes in working capital. Thereafter, you prepare the required accounts. If the accounts are required, detailed information, adjustments are given to you people, then you prepare the required accounts. And third, you calculate the funds from operation. Funds from operation. Then last is fund flow statement. Lastly, you prepare fund flow statement. These are the steps for fund flow statement. If these are all required, then this is a 15 marks question. In some cases, they will ask only for schedule of changes in working capital, 5 marks question. Or they will ask funds from operation, 5 marks question. Okay. So like this, they may ask the question on the basis of 5 marks, only one item they ask. For 15 marks, you have to prepare all the required accounts and statements. Okay. These are the steps in fund flow statement. Fund flow statement. Then next is treatment of provision for income tax. This is very important. You see this point very carefully. Provision for income tax. Provision for income tax treatment. How to treat this item. Okay. So this provision for income tax may be treated as current liability. It may be treated as current liability. If you treat this as a current liability, then you take this item, provision for income tax item, in the changes in working capital statement. First statement, remember this. Only you take this item in the first statement, changes in the working capital, current liability. If you treat it as a current liability. First point. Okay. And second point is this is treated as a provision. Treatment of tax, provision for tax is a provision, means a liability, not a current liability. Provision only. Okay, if it is treated as provision, then you have to make adjustment. In this case, if you treat that provision for tax as provision, then you have to prepare the provision for tax account. First, you prepare the provision for tax account. After preparing the provision for tax account, you have to ascertain the missing item. Provision, if the provision is given in the problem, you will calculate tax paid. If tax paid is given in the problem, you will calculate provision. Remember this. Okay. So if provision is given in the problem, then you have to ascertain the current year provision and current year tax paid. If it is treated as provision, what is your duty? You have to ascertain the current year provision made and current year tax paid. You have to calculate. If you calculate that provision for tax goes to funds from operation. You have to take in the provision for tax. Current year provision you take in the funds from operation. That means in the third statement. And Second step is, that is tax paid, current year tax paid. Go to the application. Application means fund flow statement. Provision for tax goes to the third statement, and the tax paid goes to the funds flow statement. Remember this. Okay, these are the two. Okay, you remember, if provision is considered as current liability, you take in the first statement only. And if provision is considered as provision, you have to make the account. You have to prepare the account. Then provision goes to funds from operation statement. Tax paid goes to fund flow statement, operation application side. Okay, you remember this. Clear? And this is the point you remember. And when you have to consider current liability and when it is to be considered as provision. Okay, if provision for tax is only in balance sheet and note, you consider as current liability. If there is an adjustment to that provision for tax, then you consider that as a provision. Consider as provision and open the account and take the adjustment in the account and find the another item. If provision for current year is given in the adjustment, you will calculate tax paid. If tax paid in the current year is given, you will calculate provision. Okay, this is the point you remember. Once again, I'll tell you, if there is no adjustment to this provision, for tax, then you consider that as current liability and take in the changes in working capital statement only. No further record. If it is considered as provision, when there is an adjustment, you consider that as provision, prepare the account, find the provision of the current year or tax paid for the current year. If provision is given in the adjustment, you will get the tax paid. Tax paid is given in the problem, you will get the provision. Remember this. Okay, on the basis of this, you prepare the account, then take the amount in the respective statements. Provision goes to funds from operation. Tax paid goes to application. Okay, in this way, you have to adjust the treatment of provision for tax. In the same way, provision treatment of proposed dividend. If proposed dividend is given in the balance sheet and no adjustment, you consider as current liability and take here. If there is a adjustment to that proposed dividend, you make the provision account and calculate the current year provision for proposed dividend and dividend paid. The same statement is applicable for proposed dividend also. Okay, proposed dividend and provision for tax are both same nature. Clear? And this is the point you remember. Then statement showing changes in working capital. How to prepare these changes in working capital? Okay, statement showing changes in working capital. Like this, you prepare the table. Okay, one is the particular column. First is particular column. Second is previous year amount, current year amount. Okay, in the particular column, you take all the current assets and current liabilities, and their amounts, previous year amount, current year amount. Then here is the changes in working capital. In the changes in the working capital, there are two columns. First is increase. Increase in working capital, you record in this column. Decrease in working capital, you record in this column. Okay, like this, you prepare this table. First column, particular of the asset, previous year amount, current year amount, change in the working capital, in that increase in the working capital, decrease in the working capital. Okay. In this way, you prepare the table and first take the heading current asset. As you studied in your balance sheet, there are two assets. One is current asset, another is non-current asset. Okay, you leave all the non-current assets and take current assets. All current assets. All current assets you take. First, stock in trade. Previous year amount, current year. Two amount they will give you. Current year, previous year. So if there is an increase in the current year, if it increases, you write the difference in the increase column. You take the difference of previous year and current year. ಹೋದ ವರ್ಷದ ಈ ವರ್ಷದ ಡಿಫರೆನ್ಸ್ ತೆಗಿರಿ. ಡಿಫರೆನ್ಸ್ ತೆಗೆದ ನಂತರ ಏನ್ ಮಾಡ್ರಿ, ಈ ವರ್ಷ ಕರೆಂಟ್ ಇಯರ್ ಹೆಚ್ಚಾಗಿತ್ತಂದ್ರ ಇನ್ಕ್ರೀಸ್ ಆಗಿ ಬರ್ರಿ, ಕಡಿಮೆ ಆಗಿತ್ತಂದ್ರ ಡಿಕ್ರೀಸ್ ಆಗಿ ಬರ್ರಿ. ಇವು ಎರಡು ಕಂಪೇರ್ ಮಾಡ್ರಿ. ಹೋದ ವರ್ಷಕ್ಕ ಈ ವರ್ಷಕ್ಕೆ ಹೆಚ್ಚಾಗಿತ್ತು, ಇನ್ಕ್ರೀಸ್ ಆಗಿ ಬರ್ರಿ. ಹೋದ ವರ್ಷಕ್ಕೆ ಈ ವರ್ಷಕ್ಕೆ ಕಮ್ಮಿ ಆಗಿತ್ತು, ಡಿಕ್ರೀಸ್ ಆಗಿ ಬರ್ರಿ. ಏನ್ ಬರಿಬೇಕಿದ್ರ ಡಿಫರೆನ್ಸ್ ಬರಿಬೇಕು. ಇವೆರಡು ಡಿಫರೆನ್ಸ್ ಸಿಗ್ಬೇಕು. ಒಂದ್ರಾಗ ಒಂದ್ ಕಳಿರಿ. ಥೀಟಾ. ಸೆಕೆಂಡ್ ಐಟಮ್ ಡೆಟರ್ಸ್. ಪ್ರೀವಿಯಸ್ ಇಯರ್, ಕರೆಂಟ್ ಇಯರ್, ಚೇಂಜ್. ನಾ ಈಚೆ ಕಡೆ ಹಾಕಿದ್ದೇನೆ. ಒಂದು ಇಲ್ಲ ಅಂತ ತಿಳ್ಕೊಂಡು ಎಕ್ಸಾಂಪಲ್. ಇದರ ಅರ್ಥ ಏನ, ಡೆಟರ್ಸ್ ಡಿಕ್ರೀಸ್ಡ್. ಲಾಸ್ಟ್ ಇಯರ್, ಕರೆಂಟ್ ಇಯರ್ ಡೆಟರ್ಸ್ ಡಿಕ್ರೀಸ್ಡ್. So difference goes to decrease column. Then bills receivable. Previous year, current year. Difference you write in the increase column or decrease column. Increase is there, write in the increase column. Decrease is there, write in the decrease column. Cash in hand. Write the amount, take the difference. If current year is increase, write in the increase column. Decrease is there, write in the decrease column. Cash at bank. Okay, cash at bank. Previous year, current year. You take the difference. If there is increase, write in the first column. Decrease, write in the second column. Then current investment. Current investment or trade investments. Current investment or trade investment is considered as current asset. Okay, you take the amount. Previous year, current year. Difference you write in the increase or decrease column. If there is increase in the current year, you write in the increase column. If there is a decrease, write in the decrease column. Okay, like that you mention the amount. Next is outstanding incomes, current year and previous year. Write the amounts, take the change. Okay, like this you take all the current assets. In the current asset, I think 4 items comes. One is current investments. Second is inventory. Third is trade receivable. Okay, fourth is cash and cash equivalent. Four heading you have to cover here. 4 headings you record here. And thereafter all the current assets are completed. You take the total of the first column. You take the total of the second column. You don't take the total of the third and fourth column here. Okay, you see how I taken the total. It is called as A. A means total of current asset. Next you take current liabilities. You take short term liabilities and current liability. Liability is also classified into two. One is non-current liability, another is current liability. First is shareholders fund. In the liability side, there are two parts. One is shareholder fund. Second is non-current liability. Third is current liability. Whatever items comes under the current liability, you take here. Current liability items. First is creditor. It is trade payables. Creditors take the previous year, current year. And if the current year amount is increased, and difference goes to decrease column. Remember this. You have to take the difference. If there is increase in creditor, you have to record in the decrease column. If there is a decrease in the current creditor, you record in the increase column. Opposite column you record. Increase goes to decrease column. Decrease goes to increase column. This is the very important. So I recorded the amount in the increase column. It indicates that creditor decreased. Okay. Bills payable. Current year, previous year retake, and then I recorded in the decrease column. It is indicated that bills payable increased. Difference you write. Okay. Bank overdraft. Previous year, current year. Difference you write in the increase column or decrease column. Based on, I recorded in the increase column. It is indicated that BOD decreased. Okay. Next, provision for taxation. Increase or decrease column. Increase column I recorded. It indicates that provision for taxation decreased. Okay, here I have taken this provision for tax. In this point you take only when there is no adjustment to this provision for tax. Remember this. No adjustment. Only take here. Okay. Then outstanding expenses you take. And difference you take increase or decrease column based on your assumption. Okay, one more item you have to write here, that is proposed dividend. Proposed dividend of previous year, proposed dividend at current year, take the difference. Okay. In this way, you write all the current liabilities and take the total of current liability. First column, second column. Total B. Total B means total of current liability previous year, current year, total liability, current liability. Okay. So thereafter, you take the difference. Working capital. Working capital means A minus B. A minus B of first column, A minus B of second column. It is nothing but working capital of previous year, working capital of current year. Okay. And take the total of increase column. Then take the total of decrease column. Okay. On the basis of this, you have to find the changes in the working capital. If the working capital increased, you write as increase in the working capital, first column, difference. Where there is shortage, in between these two columns, where there is shortage, you write. And the same amount you write in the third column or fourth column where there is a shortage. Okay. And put the dash in the remaining column. This is the increase in working capital. First column, second column, compare. If there is increase in the working capital, you write the difference here. If there is decrease in the working capital, it goes to second column. And as per the adjustment, you have to write the total, balancing figure. And last, you take the total. First column total is equal to second column total. First column total is equal to second column total. Third column total is equal to fourth column total. Like this, you have to complete the statement. This is called as changes in working capital statement. Okay. You complete this statement. And this question, schedule of changes in working capital, they may ask for 5 marks question. Like this.